6 o'clock, and since we have an online streaming of this event, well, we're going to begin. Thank you very much to the previous team for the presentation. I think it's very interesting to find out what's going on and to let you know about the commitment that we've had for 7 or 8 years, so that 15% of Cobas revenues are used in other types of activities, these type of social impact activities. Let me remind you that apart from this indirect contribution that we all understand and that we all give up, you can also directly contribute and you can support directly whatever initiative that you wish, the value foundation of those funds. You can do it. Any investment, any contribution is welcome to make everything more sustainable over time so that it doesn't depend on one single source of revenue. Said this, let me remind you that we have some cards that you can use in order to formulate questions that we will answer at the end of our presentations. You can start filling in these cards and asking your questions right now, and you can give them to the hostesses that we have around the room. But well, let's begin. Taking a look at the overview of what happened during last year, the structure of the portfolio. This year we're going to be talking more than usual about our Iberian portfolio, although we'll talk also about the international one, but examples are going to be predominantly on the Spanish portfolio, the Iberian one. And the structure is relatively similar to the one that we've had on previous years. So let's begin in talking first of all about Cobas situation. Give me just a sec so that I can go into the presentation. So we're managing 2.6 billion in this last term with an important growth compared to what we had on the previous year. It's very important to highlight that 66% of the equity sits in Class A, and we're seeing that this is noticeable. This is noticeable with a tremendous difference. And talking about this over time, this is going to be a substantial difference, especially if you've been 7 years with us. And this information continue on increasing 31.2 thousand investors, 15% more compared to what we had on the previous year, with positive improvements in subscriptions nor in net inflows. As you can see in there, this is very interesting, as we had in 2020 with net inflows in April with falls in between 10 and 15% at some point in time. So it seems like the message is being understood and the behavior of our customers is really extraordinary, always with us. At least this is what we are perceiving. And with regards to the information here, we're all this is a collective management fund, and a manager manages in solidarity. We all make mistakes and we all have successes at the same time. Last year we explained in great detail how we're working, and we'll continue on working like that. So this is a fund that it is collectively managing the pure sense of collective management for a lot of people, with a lot of people managing. And we've launched one new product this year. Is a new pension fund, fixed income, mainly aimed at self-employed people in small and medium-sized corporations. This is the only news. We only have a small new, but this is a product that has been greatly demanded by a group of people, self-employed freelancers or corporations, and we're only managing these two portfolio. It doesn't matter what vehicles we use to manage them, but if there is a group that requires a special vehicle, like the one that we have at the Basque Country, like the EPSBs in the Basque Country, we have them. This is a very simple way of managing things in these two portfolio, the international and the Iberian one, with local allocations to the different funds that we are managing. This is our vision, and to be honest, we're in a pretty good situation. with good stability in all senses, both in terms of customers as well as in terms of investments. So in terms of return and intrinsic value, it was really good, we have to say. Ever since we started, we have a 139% profitability in the international fund and a 167 in the Iberian fund. Last year, 23 plus 23.4% in the international portfolio and a 12% in the Iberian, and YTD 5.1% in the international portfolio and 20.7% in the Iberian, still below to the index of reference, dragging the initial results that we had. But this is definitely not concerning, because we're going to be recovering this with no problem. The main reason for this is that the valuation of our funds, despite its singularity and the reasonable profitabilities that we had in the last years, were undervalued, and we keep on adding value constantly. So as we can see in the international portfolio, in the international FI, we have 124 capacity of revaluation and a 96% in the Iberian one. So we're still purchasing with tremendous discounts everything that we are buying. And this is the outlook of the model portfolio, the one that has been chosen. This is the different values that made it up. The simplest one and the most interesting for us is the PER, 7 times benefit in these global international markets that we compare ourselves against, and we are at half the price. And this is the trend that we had ever since we started, with a huge potential, to be honest. And we insist, it's not that we're talking about bad companies that we're buying and that's why they're cheap. In the return on the capital expended in these companies very similar, is 31%. The return on a market economy of a regular company is 6, 7, 8%. So we're talking about exceptionally good companies, and in businesses in which we're having, and this is amazing what we have in our portfolio, and the benefit that we're paying is 20%. So this is a result of this per 7.3% that we're getting, with hardly any debt, with good family businesses. And to be honest, this type of mid-sized companies are the ones that we like, in which we find a lot of value. Is relatively small, between 1 million, 5 million capitalization, and this is our sweet spot, as the British or the English people say, and this is where we find the best companies. And what we will see later on is that the most interesting thing about all this is that these companies that we're choosing are growing companies. We're going to see 3 examples this year: Catalana, Occidente, Almiral, and Albio, that represent a huge growth. They are other companies in our portfolio with very important growth. It's not a matter of buying cheap companies and that's just about it, but paying growing companies, paying a little amount of money for them, not paying for the growth. In some large companies, they're growing and you have to pay a lot of money. That's not our business. Our business is to buy good companies that are growing at a smaller price, and that makes us be hopeful, and it makes us believe that we can have expectations of good valuations. When you are having this pair of 7.3, good things are going to happen. You don't know when, but good things are going to happen. Let's talk about the environment. We only had a presentation 10 days ago when we prepared the presentation, and we only had one slide. Because we don't know what the American president is going to do, the Russian president is going to do. We hardly know anything. And in financial markets, you don't have to guess what's going to happen. You do not need to write 27 books on geostrategic, because you don't know who's going to invade who. That's going to be a surprise. It could happen that China will invade Taiwan and not Taiwan invading China, although we will see. We have a Taiwanese in our group, and and we don't know what's going to happen. His opinion is probably going to be very valuable. But what we know it is that for the past years, the global GDP is growing. Some years at 3.5, others 4, in some years 1 and 2, and in 2 years we had some negative growth. In 2008 with the big recession, and in 2020 with the pandemic, with the COVID pandemic. So really extraordinary things need to happen for the world not to grow at a reasonable pace. And that's what matters to us. We are investing in companies that sell worldwide, global companies that are exposed to absolutely everything. They're not limited to Spain or to America, but to absolutely everything. What we want to take a look at is the global GDP that will help us to invest. So we're thinking about what will be the next negative year of growth in the global GDP is totally useless. You can wait for 40 years. That's a reasonably long amount of time. You have to invest thinking about the long term, but that's a long period of time. So from 2008 to 2020, we had to wait 12 years for a negative growth because of a pandemic that it is absurd and totally unexpected. Something absurd and totally unexpected might happen in the future, but we cannot be guessing when this is going to happen. And the reality is that markets, financial markets, continue on growing. This is the gray line, and we see how they're growing. Global capitalization of the markets continue on growing. That's only logical, and that's the scheme that we have in mind when doing our job. Tomorrow we start seeing the implementation of tariffs. We'll have to adapt. This is what we've done all this year. These last months we had to sell a few corporations that had gone up or that had gone through a takeover bid, like in the case of Castellana Occidente, and some other companies were being penalized because of the collapse provoked by the tariffs, Donald Trump's tariffs. So what you have to do is to adapt to the events that are happening, but not trying to prevent what's going on with a crystal ball, guessing what's going to happen. And this is the way we work, and this is reflected by this graph. If you want to ask us what do we think about tariffs, we can give our best informed opinion, but it's totally useless. It's like what any analyst can say. And what is the current status of our investment? This is our international portfolio. This is the structure of the portfolio. As you can see, we've reduced a little bit the energy block and the defensive one as well, and we've increased the cyclical one. And it is not that we said let's be less defensive, more aggressive. There are some things that go up, some things go down. Markets are moving, and we take advantage of these fluctuations. Of course, we like defensive companies that are cheap and that are growing, and if everyone likes it, maybe those corporations grow, but maybe we can purchase some others that are penalized because they think that they're going to get into a bad economic cycle and those companies are going to fall. But these type of movements, they are not based on big strategic decision, but we take a look at each one of the values, what they are generating, what they're not generating, and what we think they can generate in the future. And that's how we operate. And the movements in the portfolio have been determined by the movements of the different values. This is the impact of corporations. The greatest contribution came from Golar, Babcock, Currys, Academia, Avio. In these GNL infrastructures, we've gone down from 8 to 5 because we've reduced our exposure to Golar, because I think this is explained in the next slide. Well, it is over there because they have 100% increased, and that's why we've reduced our exposure. Babcock is the same thing. It used to be 4.5% of the portfolio, and now it's 1.3%. So we've reduced our position with Babcock. It's a wonderful defensive company that was undervalued, but now it's less undervalued. So it's not worth it to have to a 4.4 or 5%, given the alternatives that we have, and that's what we sold part of our investment in Babcock. And this type of movements in the corporations made us make our investment decisions. And if we take a look at what we've done in energy, we've mainly sold shares from Golar, and the company in which we've increased our position more is TGS, which is the world leader in deep sea seismic studies. So, and this is what we're doing right now. These two corporations that are operating more or less in the same sector, because Golar is dealing with gas infrastructure and TGS, gas seismic, one has multiplied by 2 and the other one has fallen by 50%. So we're moving money from one to the other, and this is exactly what we did, and was we've increased our oil and gas services by that amount. And anyhow, we continue on having a very important position in gas and oil. Of around 27%. And since we've seen that several of the companies that have impacted us more in the last year or so are companies in the oil and gas sector, Juan will take a deeper look at the oil and gas thesis that we have and what we still have in oil and gas exploration companies and companies that allow us to extract value from oil and gas. Hello, good afternoon, everyone. Let's take a look at what we think about oil. We're to concentrate more on the corporations. With regards to supply and demand of oil, this is something that has already been mentioned in previous years, but if you want to ask questions about this, we will provide a more in-depth answer. But let's concentrate on the companies in which we have invested and two important indicators that we take a look at from the analytic perspective, because they still a very relevant investment in our portfolio of up to 13%. We've done a theoretical exercise through Cobas International. We are investing in exploration and production of oil and gas, and what we've done in this slide is a theoretical exercise in which we have put together all these 9 companies as if they were only one. So it will show where we have our assets through these 9 companies that are operating worldwide. It's in 17 countries, some of the countries with more than one asset, and that gives us a very attractive diversification. You might think, why at Cobas don't we have less companies with greater weight in that companies, especially when thinking about oil? It's a matter of risk and diversification, not only because this is a very cyclic sector subject to macroeconomy, geopolitics, elements that are impossible to predict, the oscillation of the price of commodities, and is linked to other risks, jurisdictional risk, country risk, political risk, what could happen with the asset of a company in a specific country, regulation, taxation. This changes very much. For example, we've seen what is happening in the in the sea bases of Northern Ireland in the UK, and these activities full of risk is a relatively complex situation, and we have like a huge diversification and less risks. And this company, well, these are the indicators that they are showing to us. All of them together, we will have $7.5 million of stock capitalization with a production of 600 barrels per day, more than Repsol, and with a break-even 600,000 barrels per day, and a break-even of 40 euros per barrel. What does it mean? Below $40 per barrel, our companies as a whole in an aggregated will be losing money, and everything that is on top of this $40 per barrel create a very positive cash flow in our corporations. And we are also investing in these companies at a very attractive ratios, at an enterprise value times 2P reserves, which is an indicator that is very broadly used at the industry, of $6 per barrel, where we've seen other shares at higher levels than these $6 per barrel, a free cash flow yield of 20% that is extremely attractive, and 3 times the price of free cash flow. And we're also purchasing and we're investing in them with a level of financial leverage that is very attractive. 1.2 net debt ratio versus the EBITDA, which is very interesting, as you can see in a detailed way. And the small asterisk at the end of the table, it says all estimations are using $60 per barrel in all of our models, and we're using $60 of Brent barrel that is costing right now around $65. We're a little bit below. And why have we used $60? First, because of consistency. Can sound anecdotal, but we have been using this thesis for 3 years, and we didn't thought that it was appropriate to change it right now. And it's so because it's very close to the spot price right now, very close to the curves of the futures for the hedging of the futures by the industry and by the financial sector. And in the next and this is based in the structure of cost of the financial sector. And this graph shows, it might be overwhelming, but in the horizontal axis, it shows the accumulated production in millions of barrels and the average cost of production for each one of these basins, oil basins. On the left-hand side, we have the Middle East. We know that it is the cheapest producer. It's costing in between $20 or $30 to produce a barrel of oil. This information explains how much does it cost to take the barrel and to maintain production stable, including capex. And then we're having Guyana costing $40, Brazil, and to the right hand side we have the more expensive producers, the shale, American shale, and the crude oil from Canada. And this is based on marginal pairs, the marginal supplier and the marginal demanding party. The one that offers this barrel is going to have an average price of production, Canada, $60 to $70, and that's what's going to set the average price in the mid-term. The cost of the marginal offerer. And if the demand continues in these terms or growing terms, as we believe is going to happen, we'll see this oscillation towards this price. But there is a very important point here that I wanted to mention, and we can see this reflected in the graph. As I was mentioning before, our companies have an average production cost of $40. This means that the current market price will have to fall from $65 to $40 so that our companies will start losing money. This gives us a buffer, a security buffer that makes us feel very much at ease with these corporations that are very diversified and with very attractive figures per se. And another aspect that we take a look at is the total inventories. We keep on hearing that the OPEC is going to flood the market with barrels, that the supply was greater than demand, so the prices were going to fall, but data kills data. And we take a look at the total stocks of oil products at global level, and this is showing this black line in the graph. These are the inventories and the stock and how they've been evolving until 2025, and they're flat or falling. What does it mean? It means that demand is greater than the supply. Supply cannot meet the demand, and therefore they need to take part of the supply from the stocks. And this means that the sector is pretty balanced, and if the balance is limited, is because an excess demand. And last year we show with a black line that the stocks have dropped compared to the average of the last 5 years. When we take a look at this graph, we're not seeing a sector that it is flooded with oil, unstable, that it's having a proclivity of falling, but no, it's in a pretty stable, and we're investing in 9 companies with very good financial and economic indicators, as we've shown, and they are located in the mid line of the cost curve. That gives us a tremendous security margin versus the oscillations on the commodity price. And with this, I finish and I give you back the floor. Taking into consideration consideration that we have people working for British Petroleum here. We say that this is producing 3 times this. British Petroleum is producing 6 times, doubles what we're doing with our own company, in quotes, this set of these 9 oil companies that we're investing in. So there are no reasons to think that ours will not end up producing as much as big oil corporations. And going back to the structure of our international portfolio and finishing with our analysis of the international portfolio, as we were saying before, we've reduced our exposure in the defensive sector because the market is starting to show the correct valuation of it, as is the case of Ariza. In Ariza, we've sold our whole position there, and that was also the case of Babcock, same thing. We still maintain a certain position, but as we always say, we don't sell at the objective value because there's always something better. And they always ask us, when do you sell this value? It's when we find something better. So if the portfolio costs twice as much and there is a value that only costs 40% more, the normal thing is to sell that value to reinvest in other shares that are more valuable. But this is a probability game, not a certainty game. So we always have to try and reduce the cost of the fund and increase its potential. And this is what we do when we sell the companies that have behaved really well and have reached our target value. And then we purchase corporations that are cyclical corporations or relatively cyclical corporations, such as Dericheburg, that is doing the recycling of materials such as heavy metals, such as iron. And then we're having another company such as FNAC that have a certain cycle component, but not so cycling. Grouping them, it's not always very clear, but we have reinvested in these 2 corporations. FNAC had a very flat behavior in the last years, and the Dericheburg has also behaved pretty flatly, pretty stable, which has given us the opportunity of purchasing in the 2 of them. And in between the 2 of them, we have 5% of our then in the international portfolio right now. And if we move now to the Iberian portfolio, we see that things are happening in a different way. In the defensive, we've reduced our position and we've increased in energy, mainly due to our investment in Repsol. And in the rest, we maintain things relatively stable. The investment were in Técnicas Reunidas. We supported them in the expansion of capital, and the company has responded to the trust that we gave them. They have behaved extraordinarily good, and they will continue on doing so. Castellana Occidente, which we will explain in detail, and we've increased our participation. And the one that has impacted us more is Grifols. We had a smaller position last year, and we've purchased throughout the year. So far, we have been able to assume this negative impact, but we think we're going to recover in the future. And if we take a look at the companies in which we've reduced our position with 3 companies, it's hard to see. The graphs are very obvious. Castellana Occidente, after the takeover bid that we had, we sold our shares. Ibersol, which is the company to distribute franchises, for example, Pizza Hut franchises in Spain and in Portugal. And CTT, the Portuguese post company in Portugal, they have doubled their capitalization with very interesting increases. And it's the same that is applicable to our international portfolio, whether they went defensive or not. If their capitalization increases and they start reaching prices that gives us no margin to find value, then we sell them and we start buying other things that we deem more suitable. And this is our main purchase. In this case, it was Repsol. That was the company in which we had a very limited stake, and seen its behavior and the tremendous generation of cash flow that they have, and the wonderful allocation of capital that they're doing, repurchasing shares and paying back dividends. This has become a very important position for us right now within the Iberian portfolio, 47%, in Almiral and Grifols, the three companies with these important positions in our portfolio of 7%. The case of Grifols and Repsols, the behavior is obvious. The case of Almiral, which we will hear about right now, the behavior wasn't that good in the previous years, and that given us a wonderful opportunity, and that's why we decided to invest. And investing in the pharmaceutical sector has increased very much thanks to this investment.
Y ahora nos van a presentar Iván.
And now, Ivan and Vicente and Juan Cantús are going to present three investment cases, two of them in Spain, Catalano Accidente and Almiral, and Juan will be speaking about the international side, continuing on with trying to explain our vocation in this portfolio. And we're going to be talking about value. It's only 2% of the fund. It's a small investment, but it's very interesting, and we thought that it would be quite a good example. So over to you, Ivan. Thank you, Paco. Good afternoon, everybody. As Paco rightly said, we have settled our position at Catalana Occidente, and he shared a bit of a spoiler. He shared the reason, and the reason is that on the 27th of March, there was a takeover bid by the founding family of the company, and some of them offered, and they offered 50 euros per share, and the company was listed at 43 euros. We think that Catalana is worth more than 50 euros per share, but what actually happened was that 1 week after, Donald Trump had his Liberation Day, and he set tariffs on everybody, and everybody knows what happened. The market dropped by 10-15%, and what is it that we did? It was crystal clear to us. We sold our position at Catalana Occidente. It had been increasing by 37% over the year, and we reinvested in companies that were falling by 10-15% at that point in time. So there was a one-off event here. And why were we invested in Catalana Occidente? The key to make the best of this takeover bid was the fact that we were invested in Catalana Occidente. And this is what I'm going to try and explain right now. The first thing that I'd like to understand about a company first is what is it that they do and how they do it. For those of you that don't know Catalana Occidente is a Spanish insurance company controlled by the Serra family, and they have 63 to 64% of the stakes in the company, and it's a company that we have known for more than 20 years in my case, and 30 years in the case of Paco. And how do they do it? They do it really well, because it's one of the most profitable and solvent companies in the industry. For those of you that don't know what the combined ratio is, because it's a bit technical, to put it simply, it's an expense ratio. The lower, the better, the more efficient they are. And as you see on the graph, systematically over the course of the last 14 to 15 years, the company has overperformed the industry. Now, at the same time, the company has quite a prudent and conservative management team. Instead of paying out high dividends and decapitalizing, they did the opposite. They paid out comfortable dividend, and they grew it with the profit of the company, and this caused the company's capital to grow, as you can see in the graph, and in turn this made the company's valuation to grow year after year. So the question that follows is, why was it cheap then? Why was it an investment idea? Well, when I was asking this question to other investors and other analysts during meetings, the typical answer that they gave to me was that the company didn't have liquidity. It was very difficult to buy, it was difficult to sell, but we have never had any issues with liquidity. Every time we wanted to buy, we went ahead and bought. And every time we wanted to sell, we managed to sell. And this is partly due to the fact that we have super good traders. Alberto, I cannot see him right now, but Alberto is the head of our operations desk, and he and his team perform a great job finding shares even under a rock. And when we asked investors why they haven't, when they hadn't invested in Catalana Occidente, they said that there was no catalyzer. It was a boring company until something happened, which was the takeover bid, as we just explained. But the reality that we have seen, and that actually justifies why the company was affordable, was because the company wasn't, the market wasn't really understanding the company. They were very much focused on the automotive branch. And I say this because every time there was a positive piece of news for autos, the listing increased. And every time there was a negative headline, it dropped. But you can see that automotive only represents 12% for premiums in Catalana Occidente, and the company was not focusing enough on insurance credit. And this business is quite a profitable business because it's an oligopoly at the world level. And through its branch, Trarius, Catalana is a leader, a world leader. Let me underscore that. So what was going on in terms of stock prices? Here on the chart, you can see that between 2022 and 2023, the stock price have remained flat, around 30 euros. And what is it that we did? We built up our position. And around June, or the end of 2024, the share price started to reflect part of that value. And we made the best of that moment to partially reduce our position. And then we liquidated it when the takeover bid by the Serra family was launched. And what is the conclusion that we can draw from our investment in Catalana Occidente? The conclusion is that if the market doesn't recognize the value that a company has, there is always someone who does. And now Vicente is going to explain why we are invested in Almiral. Thank you very much. Good afternoon, everybody. We're going to discuss Almiral today, a company that amounts to more than 7% in the Iberian Fund and roughly 2% in the Fondo Selección, the selection fund. Firstly, what we need to say is, what is Almiral? Some of you may not be acquainted with it. It's a company that was founded more than 80 years ago by the Gallardo family, which is the control shareholder. They have 60% of the company, and we are dealing with the third generation. They have evolved and they have professionalized the company. You may not know the name, but you may know some of the more historical products that they have. Almax for heartburn, or Evastel for allergies. These are products that we may all have had at some point in time in our own home. But now they have steered towards a specific therapeutic area, which is medical dermatology, and especially focusing on those diseases that have to do with skin inflammation, like psoriasis, atopic dermatitis, acne, or some other nail infections, or the hair even. And in addition to that, the company is quite excellent from the commercial standpoint and from the standpoint of R&D. They invest 12% of their sales into R&D, and they have been increasing that figure over the last few years. And now we're going to explain why this opportunity came about, because apparently it is a good pharma company. So what is it that has happened here? What we see is that there was a point in the last 5 or 8 years that they made a couple of acquisitions in the U.S. market, Aqua and some active principles for Allergan, and we all make moves, and this is what happened to them. And there were some competitive conditions in the American market, and they missed part of their value. They destroyed the profitability of those operations. They were creating an EBITDA of about 100 million, and this affected the whole company. And there were 2 or 3 recurrent CEO changes, because in 2017 they hired Pete and Winter, but then they offered him CEO position at the global level. There was a new CEO, and it was later replaced by a family CEO, which is Carlos Gallardo. These are all concerns for the market, and therefore the shares, and we started to build our position in 2021, 2022. The shares were at 11 or 12, and it dropped to 8. And the market was concerned about the things that were going on, but this also gave us an opportunity. It also gave us an option to join the company. And what was it that we saw in this company? We are now going to explain it. We invested in it because they have biological products that are completely innovative for psoriasis, Ilumetri, and for atopic dermatitis, Ebglyss, and they have transforming potential. They can seek up to 800 million in sales in the future. This company had about 850 million in revenue in 2024, but the company size is going to double in the next few years with the entry of the new CEO of the family, Carlos Gallardo. We can see that the strategy is now focused on launching the new products, increasing the investment into R&D, and he decided at a point in time to stop all the different acquisitions that they had been doing in the past, all the U.S. acquisitions, and focusing on acquiring licenses and products that have been indeed quite successful. These two products that are displayed on the screen, Ilumetri and Ebglyss, are products that have reached agreements with other pharma companies, and they have the rights for Europe. And it's also a company that has no debt, and I think that's important to underscore. They have time to develop those new products. Their balance is quite healthy, so they're quite reassured. And we must also say that it's a company that we know ever since it went public. We have been following them in the good years, in the not so good years, and this always gives you a better perspective on how things are. And this helped us build our position as we saw the share price drop. Now I want to set the backdrop for the mid and long-term perspective. The base business, you can see on the graph, is around 850 million euros that we mentioned before, and the new products are the one depicted on top. On the dark gray, you see Ilumetri, and in green, Ebglyss. The plan of the company is to grow in the next 7 years by double digits in the next few years. There's very few companies that can grow on a yearly basis in double digit, and there's been an increase or an improvement in margins because these products have a better price and because of the operational leverage. Once you sell more, because you have already invested in your commercial network and you're keeping up your commercial network at the European level, it's quite reduced because you don't visit primary care physicians. You would need a very powerful network for that. You only visit specialists, dermatology specialists. So once you have that network and you populate that network with products, there's an operational boost and therefore margins improve. And now we wanted to zoom into the main product for the coming years, which is Ebglyss. And the first thing to draw from this graph is that the atopic dermatitis has a great prevalence, 3 or 4% at the European level. And here, roughly, we are saying that moderate to severe atopic dermatitis patients amount to 5 million across Europe. And we're talking about a large market here. And what happens here is that existing treatments that can be topical creams or corticoids or immunosuppressants that have an impact on the immune system, halting the functioning of the immune system. They're not as efficacious as we would like them to be, or they don't have the safety and efficacy profiles that we would expect. This is why they're developing innovative therapies such as Ebglyss. It's a biological product, a new generation product that has been marketed. The growth since 2018 to 2023, it's 23 times fold because there was a Sanofi product that was marketed and what is expected before the end of the decade is for the market to be multiplied by 4 or 5 because we have innovative therapies with better efficacy, better safety profiles, and this is actually based on estimates about Clarivate, a consultancy firm that is a reference in the healthcare sector. And now, if you look to the right, you can see depicted Dupixent, the Sanofi product that was the first innovative product for atopic dermatitis. They're selling 13 billion only in Europe, and from selling practically nothing in 2018, they went to 1.6 billion last year. We considered that this product for atopic dermatitis is used for other indications, and 60% of sales come from atopic dermatitis. So 1 billion, 1.2 billion of sales are for atopic dermatitis in just a few years. And here we have a product very similar to this, which is called Ebglyss, and they launched it 1 year ago, and in 2025 we think that they will be selling about 100 million, and in coming years that they will go up to 500 million. But why is this product going to reach that sales level in coming years? Because their efficacy profile is quite similar to that of Dupixent, and the MOA is practically the same. It has fewer side effects, less conjunctivitis, and the dosing is better than Dupixent. It's every 3-4 weeks compared to 2 weeks, which is what Sanofi offers. So it's a great product, and it's going to give us many reasons to celebrate in coming years. And this, by the way, is public information, and our job is about fact-checking all this. How is it that we do it? Well, every single day we get back to experts with to dermatologists. We read surveys on their opinion on the product. We ask them about EGLIS. We ask them about other products, and we actually compare their opinions. And the main conclusion is that this is a very good product, and that the efficacy and safety profile, it's quite similar to that of Sanofi. We haven't found anyone that states that it's a bad product. So this is quite reassuring, and we're very much convinced that sales for coming years are likely to materialize. And to conclude, I'd like to say that we have a medical dermatology specialist that focuses on this. That is indeed very important. We have innovative new products which are best in class for psoriasis and atopic dermatitis with a transformative potential for the size of the company. We have a company strategy that is very well focused, and that provides improved management. And also, this is going to focus on guaranteeing the successful launch of these products and paving the way for the next 10 years. And there's options for growth because this is a growth possibility that's being undervalued by the market. When we started buying this company in 2022, 2023, it was a company that the market, in which the market only valued the current business, but the future and growing business was not valued by the market. And that option for growth was free at that point in time. This is what we like, companies with a healthy balance that have a family behind them, and that you don't have to pay for the opportunity. And this is why we bought Almiral, and we hope that Almiral will give us very many reasons to celebrate in coming years. And now I give the floor to Juan Catos, who is going to be talking about Avio, and I'd like to congratulate him for the job done with Babcock and with Avio. Thanks for ignoring there, Juan. Thank you very much, Vicente, and thank you very much, everybody, for joining us tonight. After increasing by 80% compared to our buying price, Avio still weighs 2% in the international and selection portfolios. And briefly, we're going to discuss why. In a sense, Avio is the Italian engineering company that has the monopoly over propeller engines of the two rockets of the European Space Agency. And they also have the contract for sea and air missiles, counter missiles. They are missiles that intercept other missiles. They don't attack. We have seen in the news how they're intercepted in countries such as Ukraine, Israel, or the Red Sea. So Avio manufactures this type of anti-missile missiles. They're critical for defense, and right now the lineup is more than 3 years. Therefore, when new orders are negotiated, they are negotiated in quite good conditions. One way to see that our thesis is working out is to observe the positive evolution in terms of order book records. They show the value pending execution in already signed contracts by Avio, but it doesn't show the contracts that are likely to be landed. Like, for instance, in the case of the space industry, it is to be expected that Avio, with its leadership position, will land contracts to develop new technologies for the European Space Agency in November this year, when the new budgets are approved. And this will make its rockets more capable. We also know the plan of duplicating the number of space launches. Therefore, more relevant, their products will become more relevant. In the case of the defense missiles business, the order book has already multiplied by 10 compared to the historical series. And it's very well known that their state consumers will need more missiles to feed the anti-air batteries, the anti-aircraft batteries that are going to be delivered and that are going to be ordered. We're not only talking about wars, as Paco said before. We're talking about defense against terrorist threats, for instance. Therefore, and in concluding, when we also take into account the signed and the contracts and the signed contracts and the contracts to be signed, we can cautiously estimate that Avio is going to be larger than ever, estimating that sales will more than double, that it'll be more profitable because the anti-aircraft business is more profitable than other businesses, and Avio has been undervalued and continues to be undervalued at around 7 times profit in very few years. In the European and US markets, these businesses are very much demanded, and they are paying off more than double of what we say here. I really hope that you enjoyed this information. Thank you very much. And Paco, I give you the floor. Thank you very much, Juan. Without intending to do it, we have realized that the 3 examples are growing examples above global GDP and above what is considered normal in listed companies. And we insist on the fact that investing in value doesn't mean investing in companies that are flat. It actually means investing in companies where you think that what's going to happen, it's not portrayed on their share price. And this is what's happening in the companies that were invested in. The great potential that they have is not reflected in their share price. We don't like playing 25 times for a growth that may or may not come. If we're paying 7 times profit, then we can be more reassured. So to conclude, I'd just like to recap what we just shared, which is that fortunately some of our theses have become mature after a lot of time. Some companies had to be restructured, difficult things had to be done, but we continue to mature and things work out as they should. And we are really quite lucky because we are being capable of recycling the investments that we are doing in other new companies. And indeed, the problem that we have in our meetings sometimes is how to decide on whether we should include a new company in our portfolio or not, because there's so many candidates that there's no way around to go about this. We have rejected companies that we think are worth 80 or 90% more, but they're not worth 100% more. So sometimes we'd like to buy more of a company that we already have in our portfolio that is worth 110% more. We are rejecting companies with great potential because in our portfolio we see greater potential. So there's not a lack of opportunity. And going from PR 7 to PR 6, it's a possibility that is there, and we will always fight for it. And it's what our job is all about. And then we will see that others sooner or later will want to invest in our companies. And the great upside potential comes from what we just explained. If we're going on for undervalued investment, good things will happen, and that will be reflected on the share price. And we already talked about our team, a team that is very much unified and very well organized. I think that we are all very happy here. We feel very comfortable. I'm the first to say it. I'm very happy with the team, and they really take off a lot of responsibility from my shoulders, and we do collaborative and joint management indeed. And as we said in the beginning, we don't really know what's going to happen with the world, but we will be ready for anything that it may throw at us. The portfolio is in good condition, and there's great possibility if this recession comes around like COVID or the recession of 2008, then maybe the portfolio will drop. But it's difficult for us to lose lots of value in our companies because we have very few indebted companies. We can count them with the fingers of one hand. 2 or 3 companies may have issues with debt. We have had just one or two mistakes because of that, but there will always be errors, but they will have very little weight on our portfolio. So if there's a recession and if any company could run into trouble, this may materialize. They could be structural changes in a business, something that cannot be predicted, and that could happen. But this is what we always have in the back of our heads. What's going to happen in 10 years in this industry? Is our company going to fare well in this industry? This is why we don't invest in Vita or Alphas or these types of companies, because we didn't really know how the social medias are going to be managed. Well, if you have social media, I don't have any. We don't know whether we should be invested in one or others in 10 years, not to even mention the impact of AI on some businesses. So we try to always remain alert, but we may get it wrong in some businesses. But of course, what's helpful here is to be right 90% of times and to get it wrong 10% of times. We cannot just flip a coin and work on the 50-50 probability. We can be ready for anything because at the end of the day, everything is temporary, and we always get back from those temporary issues. So this is the end of the presentation, and we will be delighted to answer any questions that you may have for any time that you require. And I'd just like to mention something. Probably everybody in the room knows it, and here in our audience, everybody knows it. But maybe some people don't know that I don't sell anything. And I don't know, sometimes we see news of this kind. We have already filed a couple of reports on things that myself and Cobas had been subject to, because they are saying that I sell things, and the things that they offer go against the philosophy that we have been explaining for so many years. And those that fall for this type of thing don't really know what it is that I do, what we do at Cobas, and our background. But we need to remain alert, especially friends or anybody that fall for this, because we are aware that some people are falling in the traps and they're losing money. So please remain alert. If in doubt, call Cobas, call us, ask us, and we will respond that, of course, we have nothing to do with this because we don't do any marketing. We don't sell any products. If you want to come and invest with us, you can go ahead and do it, but we don't do campaigns of any kind. And it's quite surprising that people fall for this type of scams. And I don't have WhatsApp. I don't use WhatsApp. Please, everybody, be aware of that, because it's impossible for me to send you anything over WhatsApp because I don't have the app. So it's technically unfeasible. So with that, I think all is said. And thank you. And we can move on to the Q&A now. Thanks.
No tienes un boli de sobra, ¿no? ¿Tienes un boli por ahí de sobra o no?
Oye, buenas tardes.
Good afternoon. Good evening. On behalf of the Investor Relations team, we would like to share our gratitude with everybody who's watching us online and to those of you who are present here in the room. Before we begin, I'd like to remind the attendees of the fact that they can scan the QR codes and answer their question, the QR codes on the screen, and fill out the questionnaires, or there's cards in the room, and you can send your questions in writing. And online, you can do the same. You can send us your questions, and with this, maybe we can get started with the first question. Yes, Paco, we are going to start with your retirement. We have received a couple of questions about your retirement. Jorge is saying, Francisco, at what age would you like to retire? Do you think that Warren Buffett retired at a too late age, too old age? And Francisco is asking a question that he thinks is personal, but he says, after all these years, Cobas's funds are no longer author funds. Does that mean that you're paving the way towards your retirement? No, not really. The father of my wife, Maria Angeles, he retired at 100 years old. At 101 years. And Warren Buffett retired 7 years earlier than her grandparents. That's a bit early. That's pre-retirement, I would call it. And I have no intention to retire, to stop. and to stop doing this because I love it. I have no intention of doing that. I don't know what curveball life may throw at me, and we will see what happens then. But what happened with the author fund, we explained it last year. This just reflects how we go about this. We work as part of a group, as a collective, and we work collectively. So why call ourselves an author fund when we are really not an author fund, when the decisions that we make, as we explained last year, are democratic? And when I have displayed my card to do things my way, we lost all money. So, it works well to work in this way. I can say, okay, allow me to do this once, and when they supported me, it was a failure. So I think this is the future, and this is how we're going to continue to work.
Mandan saludos.
We have greetings from Argentina, and they've asked a question about the comments on the second half of the year with 5% of the company. Lily, it's a company with a lot of debt and a cyclic company. Knowing about the lack of foreseeable income, 28% of days contracted, and the maturities coming, what will Cobas do? I'm going to answer that question, but before anything else, we have to say that board is one of the most complicated companies that we have. I was referring to that one as one of the companies that in a moment of important recession can bring important problems, and we have 25% of the portfolio, 5%. So board, that's the company. This is a drilling company, board. And if nothing happens in if our thesis work correctly with board drilling, it can be five-folded, seven-folded. So the risk and the profitability is totally asymmetrical. We have to take certain risks because the possibilities of things happen is so asymmetrical with the profitability, make it totally worth it. Maybe you can talk a little bit more about it. Can you hear me? Yes, I think you gave a really good answer. I just wanted to add that about drilling, it is true of the things that this person that was posing the question, it's true what he was saying. It's cyclical, it's indebted, and we've spoken about the capital increase, and even if they do this capital increase by solving the indebtedness, it having a very good potential and a tremendous upside. It can be enjoying this upside. So we take into consideration these current circumstances, but even under the current circumstances, we have a very attractive position in it. Said this, what will happen in 2026 is something that we don't know. That's why we're doing this stress test. But in this type of maritime drilling, in these companies that do these jackups, as they call in English, and based on the transactions that we've seen in these drilling companies, because they hadn't been used for many, many years, because the old cycle was going down and they hadn't asked for new drills, and in transaction of around $140 million, taking into consideration that the equipment of board drilling is very new, we can provide 3.5 billion, reducing the 2 billion that they have in debt. It can be capitalized at 450 million this year. So if you were to purchase the company, you will see a tremendous potential immediately. So what will happen in the short term? We have no visibility, but the normal thing is that the market, as we've said in our thesis, will come with greater energy demand, more drilling, and good demand for board drilling. And this will come with reasonably good revenues, a very attractive cash flow for the company, especially taking into consideration its current stock market that is assuming a distress, as if the company was about to go bankrupt, which is not going to happen. That's what we believe, at least. Carmen, they're asking us about carries. Given the good performance in the stock market of the company over the course of the last year in 2025, and the growth that was reflected in the last trading day in UK and in Ireland, Do you still see potential in this share, and what are the reasons to keep it in the portfolio? Yes, it has an important weight in the portfolio, although we've reduced our position as it gained value. And in the month of April, with the issue of the tariffs, it behaved relatively good compared to the rest of the market. So we've reduced our weight, but we still think that it has a potential. It has a potential to increase its stock price. And the last results were really, really good. The demand for the product is increasing because some of the goods sold by carriers, those of you who do not remember, they're selling electronic products, goods that were purchased during the pandemic, and their life cycle is coming to an end, and therefore people will start replacing them really, really soon. New computers, new appliances, and so on. So we think that it's already gone through the bottom period, and it is the demand is going up. So the perspectives are really good. Potential, it's good, and that's why we maintain it. In fact, this week we said that we drop it by 5%. Yes, and we've taken advantage to purchase FNAC. It was a very similar business as we saw on some of the slides. The share of carriers was two-folded since last year, and FNAC share price or stock price, it remained flat. So we took advantage to reduce our exposure of carriers and to increase our exposure to FNAC. What do you think about the demographic fall and the impact that it have in our investment thesis? It's a problem as long as we have to pay new pensions with the new people being born. If that doesn't happen, there is no problem. We can live 40 years, 50, and we will adapt. But if we have these pensions that had to be paid by new generations, and these new generations are not born, we are having an issue. That's the only demographic problem that we have from my perspective. I don't know if there are other problems that I have not seen, but this is the most important problems that I'm seeing. And it is what it is. And the policies to increase birth rates, according to the studies and the reports that are being done, are not working. In countries that have done things, such as in Korea, South Korea, and other countries, and they're testing many different policies, but they are not working. With regards to AI, two questions. The first question is, are you actively exploring the use of AI tools, machine learning, algorithms, big data, for decision-making processes in your analysis and in your investment decision? Can you share any experience? And do you think it is necessary to adjust your value philosophy if technology will alter the basics of the companies in such a short period of time? Who would like to answer? Before this presentation, I always ask ChatGPT about new investment ideas. Can you give me a couple of ideas to invest in value? And the answer was Endesa and Ferrovial. Very interesting companies. The two of them are very interesting. Last time we bought Ferrovial, we purchased for €4, and now the stock value is 45. I don't know if value is a word that ChatGPT understands really well, but maybe you're an expert in this. Can you give us your idea?
I will do it in English. So I think the question is, how do we integrate AI into our investment process, or how do we use it? So the answer is yes, but to what extent? So I have to share my experiences. It's an amazing tool that we can use. Just like 20 years ago, we found Google that can help us to find information very efficient in a very short period of time. And I think the AI is very similar to that for the moment because it's changing very, very quick. But I can give you a real life example. For example,
Voy traduciendo un poco.
slow down.
No, bueno, que nos va a contar un poco su experiencia personal, que
He's gonna be translating now what he said. I'm assuming that English-speaking people will not require these.
inteligencia artificial es el siguiente paso y le va a contar algunas de sus experiencias, cómo está.
But they're explaining the experience and how to apply this on their day-to-day.
Two very simple examples that I use it. So it's very efficient to read all the documents. Just imagine you want to read 100 pages of annual report and then 5 broker report and then 5 expert opinion, and you can summarize them all in in what format you like. So let's reduce the time you use to read the report, and it's also provide you to check where is the source coming from. So that's one example. And
un ejemplo es que tienes
Well, he was saying that you have a tool that will allow you to insert annual reports of companies or several annual reports of the companies that you're analyzing, expert opinion, reports of different analysts, and you put all of this in this AI tool. Maybe we're talking about 1,000, 2,000 pages, and then you start asking for summaries and prompting.
Information, and they read, and you can ask them a question in response. So that's the other use case. Also, I think it's useful. We do a lot of conference call, so it has ability to transfer the audio into text or text into audio, the reverse. So it's really helpful to, for example, just imagine I was on a flight here to Madrid, try to listen to the Warren Buffett the AGM for 5-6 hours, and that can summarize into a 10 minutes podcast that I can use when I'm doing my running, for example. So let's a little bit of a use case.
Bueno, otra opción es cuando tú estés haciendo una
Yeah, it's when you have a telephone conversation, you can translate the audio into written form or the other way around, and you can use it the way that you deem is necessary.
I mean, there's a lot of benefit, but there are two limitations to me. Obvious is number one, you have to assume you have a lot of things to feed AI, right? So if there's nothing you can feed, for example, if you are research a small cap company in a country that you don't understand the language and they don't publish annual report, so you have nothing to feed. So in that case, you really need to go to the company, talk with them, and with the time, know them, and build out a model and know everything into your model. So of course it can help you to understand and learn a lot of things very quick, but there's limitation that you can go.
Bueno, sí, el límite es que en algunas
Yes, the greatest limitation is that in some companies you don't have annual report, you don't have information, you don't have analyst reports. So if you don't have any type of material to fit it, no matter how intelligent it is, it's not capable of doing anything with it. That's the most important limitation.
Limitation is, investment is also science, but a big part of it is art. So the science is to know the company and know what's the business, etc., etc. That's our job. And then the art is the other thing, because if the share price fall 50% tomorrow, I don't think AI will want to buy it. So you need to have confidence and then emotion control to do that thing that is right for the long term.
Sí, es interesante las limitaciones. Tenemos una compañía en la cartera que no la
Yeah, it's interesting, those limitations. We have a company in the portfolio that we don't want to name, but it's offering services to other corporations, and it's very economical because they think that AI can hurt it and replace its services. This is so much the case that one of the corporations that used to use their services last year, they said that they will stop doing so and they were going to concentrate on AI. They will stop using this type of services, and the share price fell by 15% on that same day. Well, yesterday they announced that they are hiring people again because AI is not working fully. Working only with AI it's not helping them. They need the human touch, and the service that they were providing with AI was really, really bad. AI is a long-term thing. We'll see the areas in which it works and the areas in which it doesn't work and what happens. We use it as a tool on our day-to-day, but I don't think it will prevent us from making the last investment decision. Last investment decision we made yesterday is a company that is worth $1 billion with 1.7 million in their bank account, 1.7 million, and it's a business that generates 200, 300 million per year. AI hasn't realized that this corporation exists. We came first. We have two questions about Cosmos. One here from someone in the room. This is one of the greatest falls in the international portfolio. Cosmos board drilling. And what will happen with Golar? You have it in your portfolio. Can you hear me? Yes, it's working. Yes. Cosmos is a company for exploration and production, and it's included in that big oil company that we mentioned at the very beginning. And it's true that it suffered a huge drop, and we believe that it's not justified since the whole oil sector was very volatile and the company has some debt. In cyclical moments, they fall more than when the commodity price falls. In the case of Cosmos, we are not worried about the debt. In fact, minimum concern compared to board drilling because they just refinance their debt. They have no maturities until 2027, 2028, and the company has gone through a growth process, investing a lot of capital because they are developing, as they were saying in the question, gas liquefaction facility in the border between Mauritania and Senegal. And this has come with a huge capex for this LNG facility. And they are investing very much, but they still haven't generated free cash flow, and it seems to be highly indebted compared to the EBITDA and the cash flow, free cash flow. But that's limited because you don't know. This is a very short-term thing. This project has gone through many things that we know through Golar and Cosmos, the COVID, a hurricane that had an impact in one of the oil processing infrastructures that needed some fixing. They had some delay, and they have to fix these things. But the investment is finished. The liquefaction facility is already producing gas, and Golar has said that they're going to advance their account presentation because they want to participate in the inauguration. What will happen in the future with this company? They're going to generate a lot of free cash flow. We believe that $400-500 million per year, assuming that the cost of the oil is $60 per barrel, and the gas is indexed to the dollar, so the same gas price as a reference. And as soon as this happens, and in fact it's already happening as we speak, in April and May they will reduce the level of indebtedness, and you will see how Cosmos is not a situation in a complicated circumstance, but as the debt drops, the equity and the capital increases its value. And that's our investment thesis. We have to be a bit patient, but the company is living a very sweet moment and is very positive for the future. I don't know if I missed something. No, you said it really, really good. I totally agree with what you just said. Rafael thanks us for the presentation and for giving us the opportunity of asking directly to Cobas managers, and he confessed that he's a bit lost with regards to our relationship with some of the funds, such as Pan Harbor. He was a manager for us in Cobas, and he was in a catalog of funds. What's the role that they play in our portfolio? How complementary are they with our Cobas funds? Where to be contracted? And if you could give us an idea, and if we could interview in depth the managers of these funds. When Peter started working for Cobas, Our commitment, it was for him to be with us 2 years. Then he was going to go on to set up his own thing, and that's what he did. He worked for us 2 years and set up a fund 4 or 5 years ago at Santa Comba. As it was explained by Maria Angeles, we are shareholders or Palm Harbor, and we have some savings and investment there. What's not in Cobas funds is in Palm Harbor and in some other funds supporting him. And the reality is that their profitability has been extraordinary in the 5-6 years that they had, 80% in 5 years, better than indexes. And his management is totally independent from ours. We coincide in some of the companies that we invest because we have the same sensitivity. We talk to one another regularly, but he makes decisions totally in a completely independent way. He's now managing 16 million euros, I believe, and anyone is welcome to invest in the fund, and you can invest in his fund through our website, can you? Not through our website. You have to get in contact with us, and we can get you in contact so you can do it through a third party. But I highly recommend it. Yeah, clearly. We have a question from Diario El Español. This is a media outlet. What do you think about investing in the defense sector? Some retailers are investing, but there are some analysts, such as Mr. Panza, that says that they're coming late and there's hardly any possibilities. We're invested in Babcock, in Avio, and even in Lila. We've invested this year, and in Indra as well, but the interesting thing about Babcock is that their plans hadn't changed from what they had 3 years ago. They hadn't seen substantial changes, and this is what we liked. It was undervalued because of that. I would be a bit afraid, and I coincide with Panza and other opinion leaders, and those people who are investing very, very much to increase the capacity very strongly. And we know what's happening. Everyone is concerned about investing in defense, but in 3 years' time, forget about it. So we'll see. In a peaceful situation, you tend to forget about that, but it will be prudent to have some investment in the defense sector. Given the growth and the interest of our funds, can you tell us about the projection of assets under management for the coming years? What we're going to be managing? I don't know. We don't know. If we manage 2.6 billion euros and they cost double, we will be managing 5 billion in a few years. And when we're managing that, we'll create new funds. We'll see. We'll try to find a mechanism so that our current customers can continue on investing, but that will be it. We will not accept new customers. I don't know if it's this technically legal or not, but that's the vision that we had when we started 8 years ago, and we haven't changed it. At least this is my personal idea. Maybe you're younger and you're thinking about other things, but what I like to do is to find good ideas. This is the fun part of my job, and see how they evolve and how they're working. When you're managing 10 billion, it's more complicated to be interested about that part of your job. Your job probably is huge, but your work is more complicated. So maybe we'll stop at 4.4 or 5 billion, probably, if we all agree on that, because as I said before, these are decisions that are made jointly. Everything is very democratic in our way of working. We don't normally talk about values or equities that are not part of our portfolio, but could you answer questions about BBVA and Sabadell? I'm posing the questions, and it's up to you to answer or not. What is your opinion about the public consultation about BBVA and Sabadell, two private corporations? I don't read anything about that. I'm skipping that part of the newspapers to make the most of my time. I don't know if there are some colleagues who would like to say something, but I cannot add anything about this. But we always say banks are semi-state entities. That's why it's hard for us to invest in this type of entities. Where the bank starts, where the state begins, it's hard to define. So We don't like businesses in which state support is essential and things of the like. So this is very general answer, but it's applicable to this situation. Rafael asked, seeing the scarcity for rare minerals or rare materials, do you intend to include in our international portfolio some companies that work with rare earths or rare minerals? There are mining companies that are having some difficulties to obtain authorizations, but the permit risk in a mining company is a critical risk. And one that it is drilling under the sea is even more complicated. I will rather go to easy companies. Why risk it when we have a portfolio that it is worth twice that amount? We don't do venture capital. Venture capital is a different type of business. You do 10 investments, 3 of them work really, really good, and 4 collapse, and another 3 so-so. So we are 90 to 10. No, we don't do venture capital. That's not our job. And investing in deep waters and these rare earths or the rare metals, I don't even understand. I don't know if there is a fund of the one like us that do it. There's always one crazy person, but this is applicable to everyone. We're investing in some gold company, copper, minerals that are easy to understand in special circumstances that we all understand. We don't do venture capital. Francisco, with regards to Almiral, what will happen if we don't see the growth that are expected in the products that you've mentioned? Can you hear me, Francisco? Thank you very much for your question. This is a very, very good question. We think that this is very likely to happen because if you see the product for AD that belongs to Sanofi with the same MOA, which is the IL-13. What we try to do with these products is reduce the inflammation produced by a series of proteins. Well, the Sanofi's product has a huge performance, 13 million worldwide, from 0 to 1.6 billion last year, and this year 2 billion. We're talking about tested products, and the company is already selling the product. It was approved last year. This year is being introduced in 15 European markets, and they already have a sales estimation of 100 million, only with 1 year since the approval. The product's already been approved, and these products, before going through the approval, have clinical trials, long duration clinical trials, verifying the safety and the efficacy. It's already been tried, and dermatologists are already using it. And we've spoken with dermatologists already using it, and we've read surveys of other dermatologists, and they all coincide of this being a very good product with a good efficacy profile, similar to Dupixent, the one of the Sanofi brand, with less side effects and with a better dosing. So from that perspective, I think we're very likely to succeed and to have huge sales. If it came to a case in which the product disappeared, a product that has already been launched, that has already been purchased. When we buy a company, we do it with a safety margin. When we invest, our average price was 6.5 euros. 6.5 euros was with the existing business, but then came with a new product such as Ilumetri that it is growing, and they're selling 200 millions of it. As the company grows, the value grows, and we already thought that with the current business, the valuation was very similar to what we were paying, and we were taking for free the potential future growth. So we have a good safety net, a reasonable safety net.
About the oil prices, Jorge was asking, when talking about the results of oil companies, we've been talking about $60 a barrel. The market sentiment is that the price could be lower for a long time. Have you taken into account this possibility after your analysis and conversations with analysts of the market? Do you think that lower barrel prices are unlikely? Well, in a way, what we're trying to do before is to answer this question. We think that prices below 60 sustained over time are unsustainable, because at that price there is a production of about 10,000 barrels a day that would be losing money, and private operators will not be endlessly losing money. Like with any cyclical commodity, those that are losing money close operations, and if you close operations, 10,000 barrels would fall, and then supply would fall, and if supply falls and demand continues to grow, because we think it'll continue to grow, then the price need to adjust, because there will be more offers than demanders, and this is something that normally happens in cyclical industries like oil and gas, and we think that that is unsustainable, because if it decreases for some producers, and actually we are seeing this already. Last week was quite interesting, because there were a few comments by U.S. companies that pointed at the fact that their investment and their production, their estimated production, is decreasing for U.S. shale. It's more efficient and faster to adjust, because the U.S. is quite an efficient and fast economy. So as soon as they see that there's a decrease in oil price for some operations that are not profitable, they close them. They close and open the shale wells very quickly. So they could reduce the production to $60. And if they're at $50, that would mean that there's many producers, not just for shale, but also for Canadian heavy oil, deep sea. Many operators will be on the losing end, and private companies are not going to be losing money in the mid-run in a sustained ways. They will close operations, then supply disappears, and then price increases. So it was a long answer, but we don't think that a low price for oil is sustainable over a lot of time. Alfonso was asking us about Alair. What is the current exposure of this company to this company of the fund? The position is close to 3% in the international fund, roughly. What we've done in the last year with the different drops that we saw last year was to increase our position, because we reviewed our thesis and we were trying to remain conservative where we had doubt, because at the end of the day, things are not 100% clear, and sometimes you have doubts. For instance, in terms of provisions, we are in doubt because of the issues that they had with glyphosate, and we always try to spare incremental positions. So even in that more conservative scenario, we thought that the upside, the potential, was more than double. And last year, we started increasing our exposure to the company. We stick to our convictions on that company, and we think that right now there's negative things such as doubts regarding the potential litigations that they will have to face, but we think that they will be solved soon. Let's see if there's a positive solution for them, then they're lower than the provisions that we have, or if the resolution is negative and we have to pay for those positions. And that will be solved in 12 to 18 months. And then there's some doubts about the pharma business, which is one of the main products. Sarepta lost the patent, and obviously the sales of those pharma business are decreasing, but they're also developing new products that are in the pipeline and increasing sales. So we see that there will be a decline in sales and there will be a pickup. So it's a valley, but in the future the company will continue to grow. And Then there's the agribusiness. They have had structural issues. The cyclical part of agriculture, it's a cyclical business, and they're in the lower part of the cycle, and that has impacted them in the last year. But we think that this will be normalized in coming years. And then there's an issue. They had a product and they lost the license for it. It was dicamba. The regulator is going back to this, and what's expected is that in coming months they will obtain the approval for that product. So the mid-long run perspective is quite positive. It's a company that it's 6 times cash flow with quality businesses like the ones that they had. For instance, the agribusiness. In that business, they are world leaders with competitive advantages, with scale, with R&D investment, and they are going to remain in the playing field for many years. And they have the consumption business. The market, they're paying that of the multiple of 15, 30 times EBITDA. And this is a company, a business in which the company is not listed. In the pharma business, they had an issue. They lost the patent for a product, but they will get it back. So we think that the outlook is quite good for the future years. John is saying that, if possible, he would like you to touch on Cobas concentrates, especially talking about fair value. We never talk about that very much, and they always say that it does reflect the best investment ideas. And he wanted to know whether the minimum contribution level could potentially be lower than 20,000 euros. We could talk about the fund and we could advertise it, but basically one can imagine that the portfolio has an amalgamation of the main stocks of the international portfolio and the Iberian portfolio. It's a grouping of 60, 70 stocks. That's a criteria. What is it that we try and do? We try, but we don't always get it right, to get the stocks in which we think there is some sort of catalyst to close the gap between value and price relatively fast. Sometimes we got it right, such as Goller. Last year, everything was relatively fast, and the investment was also considered important. And we try to do this with different stocks to stick to convincing stocks, stocks that we like, and for which we see that something could happen in the relatively short term compared to others that we have in our portfolio and for which we are more agnostic. But then there's surprises like that of Castellana Occidente, something that was unfathomable, something that was always a boring company and that has been subject to a takeover bid. That was, not to say the least, unexpected. And Carlos, what do you say about that minimum? Is that the legal minimum? Can we reduce it? There has been a change in the law, and it says that they can be modified up to 10,000 euros, even though the initial investment is 10,000 euros, and then the additional investment is 20,000. If we modify our leaflets, that could be possible. Maybe we can think about it. Let's compare pros and cons, and we'll think about it. Good afternoon. We would like to know how in the team you avoid a confirmation bias for those stocks that you actually like. Thank you very much and good evening. I think that the best way to go about this is by saying the truth, and I think we all speak our minds. I do. What about you guys? We try to do it, yes. At the end of the day, working as part of a team is helpful because it's easier to fall in love with the companies that you follow closely and to have that confirmation bias. But decisions are made jointly, and we have periodical meetings to discuss our ideas, and everybody shares their position. And I think that's the best way to tackle it, because when you just have yourself, it's complicated to avoid the confirmation bias because it's something inherent to human psychology. But we are quite a varied team, and I think that's helpful. And we're quite tough in our meetings, aren't we? We're quite harsh. Well, and the reality is that everything is put out to a vote. Also, because when we talk about the objective value of a company, we all have access to the calculations behind that. So we can analyze it step by step And if an estimate we're being overly optimistic, or if you don't fully understand it, then you ask about it and you compare that to the rest of companies too. So you have several minds working on the same estimates, and that can be very beneficial. And since we're talking about that, Jose Manuel is asking, when a position meets the target price, but you are reassured and you have knowledge and you see catalysts, but a bit far away, how do you manage that? Do you close the position? Do you reduce the weight? We never make it to the target price. We have explained that, but we discuss the sales pace, something that we discussed for Babcock. When do we decrease the position from 5 to 1? And somebody said that before. That's an art. It's not scientific, because you need to put into the mix the fact that the gap is reducing to the reference value, to our value, and it's just likely for there to be an increase when it's getting close to PR 15. And in parallel, there's a moment in which good things are happening, everything is working out, and the market ends up recognizing it. So you need to try and see whether the market is well invested when you let it work for longer, or when invested in something else. And this is something that we discussed this morning. We were saying, should we sell a bit of this because it's increasing 10%? And this is our daily discussion, the pace at which we sell. And it's more of an art than a science, and there's no set answer for that. Right now, Babcock has a potential, an upside of 50%, and we have 1.5% of the portfolio. But in addition, if somebody comes to us tomorrow proposing a value or a stock of only 50% with a potential of only 50%, we'll say no. So it's inconsistent. If we were always going to be consistent, today we would have to sell all our stocks, all our shares in Babcock. Having had a background in this gives you quite a bit of a history. Sometimes you made the opposite mistake. When you know a company very well and you have been at the shipyard for very long, sometimes you let the stock work for longer and let it get to the target value a bit more. So it's case by case, and it's an art, not a science. Eloy was saying many times the fund has been benefiting from a positive profitability, such as Capcot, Kyrgyz, Atalaya. But what can we learn from Seacrest, a company that works in oil in Brazil? Thank you for teaching us to be better long-term investors. A couple of things. We have done things that we said we will never do. That we invested in an OPV, and we normally never do that. We say that to people, but in this case, we had oil and people that were invested in oil and recommended this to us, and we invested in this company, and everything went wrong for them. Poor guys. The barrels are there, and the tankers are there, but the thing is that it was someone with not that much experience. We didn't realize that the management team wasn't that good, so there was a series of mistakes in place there. It's always essential to bear this in mind when you invest in a new company with too much marketing. We always try to avoid that, but we were weak that time. I don't know. If I may add, a few things that we have learned from Seacrest is something that we were already doing in the past, and it has to do with weights. Seacrest worked out wrong. The weight was 1%, and you can get back from that very easily. This is why we have a diverse portfolio with 9 companies and reduced prices, because things may happen. And as Paco said here, we fail to see the lack of quality in the management team. But if it's 5%, it hurts your portfolio. But if the weight is only 1%, then it doesn't harm you that much. And there was precisely another question about how and when do you detect an investment mistake when the situations arise. It's actually a process. It's not the next day when you realize that you got it wrong. It's precisely over a process, and you start seeing that things are not working out as you expected. And this was a mistake that we made. But in the last 3-4 years, we have made practically no mistakes. It was something progressive. Scott Fitzgerald said, "How do you go bankrupt?" Well, very slowly, and then it's sudden. So this is how it happened. Vicente is asking us about Organon. This company has hit the headlines in the last few days, and in the last results, we've seen an income decrease, and their dividend has been sharply reduced. Is there some sort of red flag about this company? Do you stick to the previous investment thesis, or are you reviewing it? Thank you, and congratulations for the excellent job that you're doing. Thank you for the question. Organon, for those of you that don't know, it is a pharma company, and we have 30 basis points in our international fund. Last year, when we were invested, actually somebody asked before about when we review our thesis. We were invested in this company, and the company focus was women's health. Over the course of the year, they announced an acquisition of 900 million that was going to take them to something different. It was actually the world of dermatology, and we're acquainted with that because of Almiral. So they were leaving behind the core, and they were going to make an important investment into something different. It can be good or bad, but it was different to the strategy that they had announced that they were going to follow. So that sparked some doubts. And in addition, when companies report the results, they talk about the EBITDA and the adjusted EBITDA, and they start making one-off adjustments, and those one-off adjustments became greater, and they took that away from the adjusted EBITDA. So that also cast a doubt. So last year, we reduced our position partly, and as a consequence from this acquisition that they made has stemmed a reduction in dividend, and this is what has materialized this year. Therefore, the shares have dropped. We are revisiting our thesis, and it's true that last year they were at 20, now they're at 9, and they are listed at 3 times their cash flow. So we have to balance out pros and cons. We need to see whether the consistency of what they wanted to, what they said they were going to do compared to the potential value, if it's worthwhile. And sometimes we hear these things and we take action. According to our thesis, we think that the company should perform in a way according to the strategy that they announced. But if they change that, we have the opportunity to determine whether we want to reduce our exposure. And this is what we did for this company. And now to complement that, talking about pharmas, we talked about Bayer before. Well, for the rest of pharmas, what we did last year was Teva, for instance. And we reduced our position. But this year, there was a doubt about the evolution of the margins, and we reinvested in the company because our conviction is greater. And the other company was Fresenius. It's increased by 70% in the last 12 months, and we sold our position because the potential has decreased. About Organon, we must say that it amounts to 0.4% of the portfolio, so our position is relatively small. Our doubt now is whether we should buy back and increase our position to 1%. We're talking about very small positions. Are you considering looking for more companies in China? Because it seems clear that it's becoming increasingly important in world economy, and valuations are cheaper in general. Would you consider the macro change that is leaning towards China? For instance, the emerging automotive industry in China is catching up with us. I'm glad to hear the question. This is precisely what we're doing in the last 2 years. In CKH and CKA, we have been investing in that. We're talking about 5.5% of the international fund. We have invested in other companies that we cannot disclose that have a lower weight, but it's an additional 2%, I'd say, roughly. 7% is with companies in Hong Kong, 7-8%, and they have business with China. And we are indeed working on that. And we have been very positive regarding China in the last few years, undoubtedly, without a shadow of a doubt, when China has been clearly over-criticized, and they were talking now about subsidies, and they were talking about the negative real estate situation, but we were trying to make the best of the decrease in stock prices, because what happens there is that they work a lot, they save a lot, and thanks to that, they're making it through, and they're going to exceed us right, left, and center, and over the top with drones.
Nico se ha movido de Shanghái a Singapur.
By the way, Nico now has moved to Singapore, so he lives there now.
Fit from China's growth.
Yeah.
Yeah. I think the most.
And if we have invested more in China or not.
Yeah. Well, for one, I think for a long time we have been trying to invest in company that has business, either has business in China or they benefit from the growth of China. In this case, energy is a good approximate because the growth of economy of everything, you really need a lot of energy, and then China is not exceptional. So I think energy is one angle for that. And the other one is we do always try to look for a company from everywhere in the world. And since I was based in China, I have been looking at the stocks there. But you know, even the stock market was cheap, but there's good company and bad company. You have some company like a bank, real estate, that is very difficult to understand. Is now not our philosophy to invest in. We end up not investing in it. And they are very good company that with brain power, with you know, technology, etc., but they never cheap. So we always pay attention, not only for the competition perspective, but for investment perspective. But in China, we haven't find, you know, in the history, we haven't invested too much. But in Hong Kong, we do find some investment, like you know, CKH we present last year. We have other related to real estate. We have some family business that explore globally, based in China, listed in Hong Kong, etc. So yeah, that's my comment.
Bien, bueno, seguimos
That's roughly what I mentioned. He is following China, Chinese companies, but also because China's growth boosts the growth of other industries like the oil industry and the global growth. And it helps us to know what's going on in China and the United States. And we're also analyzing companies and new companies. And we have indeed introduced in our portfolio several Chinese companies in the last 2 years, indeed, quite clearly. Juan was asking us if a scenario materializing with the euro gains weight as a currency for the international reserve, and if the rates are low, what would be the implications for equities in general and specifically for value investment compared to growth investment? I have no answer to that question. Does anyone there? It's a very difficult one. I would be surprised if in the international arena, with a doubt at 100% and zero growth, I would be surprised if it became a global reference. I would be surprised if that assumption were to crystallize, rather the opposite. You talked about the Grifols in your presentation. There's several questions about them. I have the question from my tour here. You maintain Grifols in the Iberian portfolio, so I considered that you have trust on the majority shareholders and the managers. So my question is, why do you trust Grifols? Vicente, go for it. Okay, I'll reply this one. This one is a difficult one. The company's thesis is that they continue to be a growth company with a business model in which, well, 3 players control the plasma market at the global level. It's 70%. There's entry barriers to a certain extent to this business. And all the noise and all the problems that have emerged in the last months are improving the way we see it. And I encourage you to take a look at the results of 2023, 2024, and the first quarter of 2025 we've just published yesterday. They have increased their revenue in double digit every year, EBITDA by 20%, and the cash flow, which was one of the problems because the company actually has more debt than we like to have. The company is starting to generate cash flow. So we see the cash flow of the last 12 months and we exclude the acquisitions that they're making, that's 200-300 million, and deleveraging is happening. And we are at EBITDA debt ratios that are more reasonable. So the business model is a business model that we like, and they have growth. If you look at the company in 2004, it was a 400 million company. Now they're selling more than 7 billion. EBITDA was 80, and now it's 1.8. And we're talking about 3 players in the industry. It's a highly concentrated industry. It's an oligopoly, and it's a growth industry because plasma proteins are needed for many chronic diseases. So there's perspectives for growth in coming years. There's perspectives that the cash flow will improve and that there will be deleveraging. So there was doubt. People had doubts on the legal front because there was a Gotham report. This has been checked by 2 independent auditors. A regulator has looked into it. The company has issued there. If there was a problem, people wouldn't buy debt from them. And about transparency, well, the transparency is improving. In a couple of months ago, we were in the Investors' Days in London, and their outlook was to grow 6-7% their revenue and to improve their margins. And then about corporate governance, there we see that there has also been an improvement. They have hired professionals like the CEO, Nacho Avia, and the experience and the track record is really good. And the CFO is new too. In the board, there's more independent directors than relatives. So the balance has been reset. Actually, the takeover bid that Brookfield wanted to launch was rejected by the board because the price was not interesting to them. They were standing for the interest of minority shareholders. There's been improvements. There are things that need to improve. The cash flow needs to improve, and the cash flow of the company also needs to improve. There's been a substantial improvement, and share prices have decreased by 30-40%. So there is an imbalance between the fundamentals and the company's evolution and the reality of what's actually happening. So this is why we stick to the thesis for that company. And I'd also like to say that some things may go wrong. We may be mistaken when we do our company valuations. We always try to have a conservative approach, and in a conservative case, we should make good money with this company because we have been progressively buying as they fell and as the prices were lower. So even if negative things happen, then the impact should be positive in the long run for the company. David was writing first and foremost as a teacher. I highly value the job that you do to disseminate this content, and I encourage my students to follow the conference from their homes. So a heartfelt thank. I'd like you to talk about the outlook for Técnicas Unidas. For 2026, they say that they will have more than 5 billion in sales with an EBIT margin above 5%. Do you think that that is feasible? Yes. We see that as feasible. We went to Abu Dhabi last year, Juan and myself, and they convinced us. They took us on a helicopter trip. It was 50 degrees, and then in the presentation, we couldn't even stand. We didn't have enough strength. No, we see that that's feasible. It's one of the main contributors, and it has a significant weight in the Iberian portfolio and in the selection portfolio because we do think that the mid-term outlook is quite good. And this is what they're saying about 2026. We're more prudent about what they said in their strategic plan before 2028. They were saying that they're going to be above 5 billion in sales and 8% in margins. We're more cautious than they are, but there's no reason to think that they won't be successful, that they won't achieve this. And we must say that too. What do you think of the media industry, taking into account the profound disruption that they have in their main funding industry, which is the advertising industry? That's very complicated. The audiovisual industry is undergoing a moment of change, and we said before that sometimes it's difficult to foresee where the disruption is going to come from. And indeed, this is a very clear example. We don't really know how the media business will react, how this will evolve in coming years. We're exposed to Vocento in press. This is the value part of Vocento. The value part of Vocento relates to other things rather than the print press. But it's complicated to invest in the media industry right now. And also, stock prices start to reflect this. Both agencies, as much as audiovisual companies, are there at more attractive prices than 10 years ago. But right now, we're not getting involved with that. Marcos was saying after 7 years as investee, hearing you say that the ROCE of the stocks that are in the international fund exceeds 30%, I don't see the value of ROCE in the liquidation value or of the stock. If that is the annual returns on the invested capital, why is this happening? Well, because sometimes share price takes some time to reflect that value, and we're in that process. The process is not over. Normally, that 30% should be reflected on returns. It is true. There have been some mistakes along the way. That is true, and that makes comparisons difficult. But normally, this should be reflected on stock prices, and that's what we hope. Okay. What's your outlook for energy with low oil prices and the newly announced contract for Golar in LNG and the impact that this has on the current stock price? I may answer this question. For 5 years or 3 or 4 years, we have been using 60 as the price for oil prices. When it was 100 or 95, 60 is our reference price, and that's what we work on. And the gas price is relatively similar. For Golar, we practically have no exposure for oil prices or gas prices, and this is why our exposure was so relevant. It was 8% of the portfolio, because it was subject to long-term contracts related to infrastructure that are 10 or 15-year contracts, and that's what we liked about it, and this remains the same. Now they have just landed a couple of contracts in Argentina, a country that is improving a lot, providing more certainty than in the past. And normally, these contracts will also have an impact on the share price, even though part of the share price already reflects this, and it's quite evident. And I think that we will continue in this direction. They have 3 interesting contracts that they will be enjoying for the next 20 years. And in 1 year time, they will land an additional contract. And that being said, the revaluation potential continues to be enough for us to hold 5% of the portfolio with Golar, which is what we have right now. But at the end of the day, we cannot love or hate any companies. Even though Golar made us earn a lot of money in the last years, the attraction to the company, the bond to the company is non-existent, in the sense that if we have to sell because the share price increases, we will sell. It's about value and price, just like with any other company. It's like we mentioned when we talked about Babcock. We know the business, we know the company. We have been very much involved in the last 5 years, but that's all. And we will continue to sell at the pace that we have to sell. And this is one of our internal discussions, at what pace do we sell Golar shares in particular. So it's about value and price, just like for any other company.
Have you ever considered do a fund that distribute dividends? No, never. Because any investor, and we know investors who every month they get a scheduled reimbursement and they get their own dividends. You can organize yourself your own dividends, and in fact we have customers who have organized themselves like that. But why obliging everyone to pay a tax when only a few of them need it? If you need it, you will have to pay the tax, and that's just about it. We have already had 2 hours of conference. Maybe I can ask the final 2 questions, and they are somewhat different. Someone here at the audience, they've asking you how you live the day of the big blackout. I was on my way home, so I was extremely lucky because I could spend it at home. We were okay. We did things okay. I don't know why, but we were able to even do some sales in some purchases in the afternoon. I don't know if we had generators or why, but it worked. And the last question about the names in the Grupo Santa Comba, and so on and so forth. I had family in Santa Comba. There is a big Galician sentiment in Francisco when choosing the names of the companies of the group, of the holding group. Yes, it's obvious. They are all places near Ferrol. So obviously, yes, I have a tremendous Galicia sentiment. So we're going to leave it at this. Thank you, Carlos. Thank you, everyone, and we'll see you next year.